So the next question in knowing when to buy and sell is, well, which currencies should we trade, which are proven to be the most profitable, and at what times should we trade them? And as you'd expect, brokers have these answers. So let's just look at that right now. This is from a major US broker based on some 12 million trades. And these were the percentage of losing trades, percentage of winning trades that the clients did. Isn't this great information to have? We know, for instance, that the Australian dollar, New Zealand dollar tends to be overwhelmingly, for traders, more likely to be profitable as a trade than as a loss. And it's also interesting to note that the more liquid or better known currencies don't appear to be the ones which are the easiest to trade, such as euro pound. Having said all of this, we have to be careful, because it's not how often that you're right or how often that you're wrong, it's whether or not you're profitable. So which are the most profitable currencies for private investor traders? The most profitable currencies, well, actually right across the board, and here's a warning to everybody wanting to trade FX, most private investors lose money. Their average losses exceed their average profits. Where are they closest to making money is Australian dollar, Japanese yen, 60 to 63 pips. Which is one of the worst ones for them to try to make money? Euro dollar. Euro dollar is one of the worst for them to try and to make money, as is pound, Japanese yen. You'll notice, therefore, from the previous slide where I showed you the ones which they're most likely to be right, i.e. winning trades versus the percentage of losing trades, they seem to be losing a lot more when they lose than they're winning when they win. And that's why these two charts, the last chart and this, look the way they do. I mean, you can see, for instance, when it comes to sterling yen, they lose 122 pips on average when they lose, and they make only 52 pips in terms of average profit. If you go back and look at sterling yen on the chart over here, what you see is they win 66% of the time. The only thing is, although they're winning 66% of the time, they're actually making far less when they win in those 66% of the time than they're losing when they lose. So what does that mean in essence? Well, first of all, look at the average. It tells us that most private investors lose about double the money that they win. Well, by going on this course, that should change, because we're going to teach you how to get things better. But here's the important one. Australian dollar, Japanese yen, the average loss and the average profit is about the same, but as you can see on this chart, because they're winning more often than they're losing, overall they're going to be more profitable. Got it? Overall, they're going to be more profitable. So now we know which currencies to trade or actually focus on. That doesn't mean you don't trade euro dollar. It doesn't mean if you don't see a strong pattern, you don't trade sterling dollar, all the popular ones. What it does mean is we have to be very, very careful that actually the ones which are lesser known are the ones which are the easiest to make money on. And if this is what the average trader is doing, then we know that we're going to be better than average because we've taken this amazing course, and therefore we're more likely to be profitable as a result.